Hey there, Evan Swanson, Swanson Home Loans, a division of Cherry Creek Mortgage. Today I'm here to talk to you about the difference between a conforming loan and a jumbo loan. The first difference is the loan amount, which is ultimately what defines a conforming loan versus a jumbo mortgage. So for 2018 here in Portland, Oregon, the market that I work, the threshold that determines a conforming loan and a jumbo loan is $453,100. A loan amount at that level or less can be underwritten to conforming loan standards, whereas a jumbo mortgage, an amount in excess of that, are underwritten to jumbo underwriting standards. Okay, the second difference is that conforming loans are underwritten to more standardized rules. Fannie Mae and Freddie Mac are the two entities that dominate that field. They have produced a selling guide or underwriting manual that defines how loans are underwritten for conforming loans. For jumbo mortgages, the market is much more fragmented. There are a lot more players and institutions that underwrite jumbo loans, and therefore they have a lot less standardized rules and criteria for that. In terms of how they are underwritten, jumbo loans tend to be underwritten to a much higher standard than conforming loans. Let me give you a few examples. With regard to credit, typically we see jumbo loans require higher credit scores, and in addition the applicant must have more credit depth, more accounts and history on their credit report than a conforming loan. Second, in terms of income, we measure applications as a debt to income ratio, the level of obligations as a percentage of the income. We typically see jumbo mortgages limited to a debt to income ratio of 43%, meaning 43% of the household's income can be allocated to obligations in the new mortgage payment. Whereas with conforming loans, we can typically get applications approved to 45% and in some instances 49.9%. So conforming loans allow for higher levels of debt to income. With regard to assets, under a jumbo underwrite, typically the jumbo underwriter will require that the applicant have a multiple of 6 times the mortgage payment left over in financial accounts after the down payment and closing has happened. Whereas with conforming loans, when buying a primary residence, the underwriter doesn't necessarily require us to document that at all. Lastly, has to do with the appraisal or the collateral underwrite. With a jumbo mortgage, we typically always need an appraisal, and in some instances we might need 2 appraisals or even a review appraisal on top of the initial appraisal. And with regard to a conforming loan, we can typically get the loan approved with an appraisal, and in some instances even get the appraisal waiver. In terms of rates and fees, currently actually the jumbo and conforming loans are pretty similar, but at times you do see small differences between the two. So the bottom line is the conforming loans will be a little less cumbersome to be underwritten to compared to a jumbo mortgage. If you have questions about qualifying for either, I would love to be a resource. Contact me today. Thank you.